In this video, I want to talk to you about stock market investing versus real estate investing. Now, I'll cover both the pros and cons of stock market investing and the pros and cons of real estate investing. Make sure you watch this video all the way to the end, because at the very end, I'll be answering, is real estate a better investment than stocks? Now, at the end of this video, you should have learned enough about stock market investing as well as real estate investing to make an informed decision about which path you want to go down first. If this is your first time here, always remember to gently smash the like button so that I can go tell my Asian parents that I have a real job. Now, without further ado, let's go. Okay, so let's start with the pros and cons of real estate investing first. Now, the pros of real estate investing is that it's easy to understand real estate. It's a house. You borrow money, you buy the house, you manage the upkeep, you pay your fees, and you bring tenants in. And over time, your house will appreciate in value and you'll sell it eventually, if you want to, for a higher price. Now, another pro when it comes to real estate investing is that the value of your house doesn't really fluctuate as much compared to shares. And because it doesn't fluctuate as much, the debt that you borrow from the banks to buy the house is generally considered more safe. Now, real estate is also a really good hedge against inflation, and I'll explain that with a practical example in just a second. Of course, when it comes to real estate, there's plenty of tax advantages. You can claim your mortgage interest, and in Australia, we have this thing called first home buyer's grants, which essentially means that the government will pay for a certain amount if this is your first time buying a home.
At the same time, even if Australian government help us, just look at the Sydney housing prices. It's incredibly expensive.
And lastly, real estate is real. You can walk into it, you can feel it, you can touch it, you can smell it.
Or you can even walk into the house and scream, "Who's your daddy?" and no one will care.
But can you do that with stocks? Probably not. Now, when it comes to the cons of real estate, it's just going to take more time. It's going to take time for you to find a really good deal, as well as the transaction process, finding a really good tenant, and then managing the tenant itself. Not to mention that the barrier to entry for real estate investing is a lot higher. Usually you need about 20% of the housing price as a deposit, and not that many of us have that much money saved up in a bank account. Also, there's a lot of costs associated with real estate investing. There's the lawyers, there's the real estate agents, council fees, utility fees. They all add up at the end of the day. And because the barrier to entry for real estate is so high, for you to get diversification is really hard. It's not the same as buying an index fund, and in the process of doing that, you're basically getting the best diversification you can get across all industries. And one of the last cons when it comes to real estate investing is that it's going to continuously cost you money if you cannot bring a tenant into the house. Because someone's got to pay for those taxes, insurance, utility bills, and all the other costs that comes with real estate investing. Now, remember earlier in the video, I mentioned that real estate is a really good hedge against inflation. So let me explain with a practical example here. Imagine we're buying a house worth $500,000 and we use $100,000 of our own money. And we borrow the rest from a bank, so $400,000 in debt. Now, say inflation goes up by 3%. And 3% inflation rate is a lot, but bear with me, I'm just trying to demonstrate a point here. Say the 3% inflation rate is caused by a government printing more money, lowering interest rate to try and encourage people to spend, then it's actually cheaper for people to borrow money to buy houses. And because it's cheaper for people to borrow money to buy houses, the demand for housing will generally also go up. And as demand go up, then the value of your house will also appreciate. But the interesting thing here is that the actual value of your house hasn't changed, because that $1 you're holding today is worth less than it did before. And it just costs more dollars to buy the house.
I just want to pause and make a note here that I am simplifying the example. In the real world, it's a little bit more complicated than this in terms of how the value of your house changes with inflation. At the end of the day, I'm just trying to make this really easy to understand, and the slides are actually quite difficult to make. So if you want to support me, just gently smash that like button. All right, let's continue.
Now, say the value of your house also appreciates by 3%, and your debt stays exactly the same, $400,000. And that $15,000 on your $100,000 investment is 15% return. Even if you take 3% inflation rate away, that is still a 12% real return on your money. And that, my friend, is why real estate is generally a good hedge against inflation, and also why it's so attractive as an investment. So then the question becomes, is it worth investing in real estate? And my opinion on that is that because of rental income, scouting a home within your budget and remodeling takes time. It's worth investing in real estate if you're willing to put in the time and you have a decent amount of money saved as a deposit. On top of that, since real estate is generally a good hedge against inflation, it definitely has a place in my portfolio as a form of diversification in the future. Okay, now let's go through the pros and cons of stock market investing. Now, when it comes to the pros of stock market investing, stocks are generally really easy to purchase. You click a couple buttons and now you're officially a shareholder. But most importantly, stocks are liquid. What I mean by liquid is that if you want to turn that shares or stocks into cash, it will generally take you, say, 2 to 3 business days. The other good thing about stock market investing is that diversification is really easy to get. If you buy into an index fund, you are diversified against multiple industries all at once. And it only takes you a couple $100s to do that. And you don't really have to do much work. You basically do the research around which company or index you want to invest into. You click a couple buttons and you're ready. There's no need to deal with really angry tenants or bursting water pipes or broken toilets. And the transaction fees when it comes to stock market investing is also very minimal. It usually happens once at the time of purchase. And if you buy index funds, then there'll be a small ongoing management fee. And similarly to real estate, there's plenty of tax advantages as well, depending on how and where you hold those stocks. So think superannuation fund, and if you're in the US, think 401k, Roth IRA. Now, when it comes to cons of stock market investing, you do have to pay capital gains tax when you sell the asset. And depending on the maturity of the company, the share price can fluctuate a lot during the week, day, or months. And the other really interesting thing about stocks is that depending on whether the stock is a dividend stock or a growth stock, your returns are not crystallized until you sell the asset. And not to mention, because share price is so readily accessible via an app, you can check it every day, people tend to make some very emotional decisions in tough times. And they make knee-jerk reactions and sell all of their stocks if something bad happens. Now that we covered the pros and cons of real estate investing and the pros and cons of stock market investing, the final question is real estate a better investment than stocks? Now, to judge whether real estate is a better investment than stocks, we'll use 3 main criteria. We're going to look at time required to make the investment work, the cost of investing into that asset class, and the return over time on that asset class. So from a time perspective, real estate investing generally takes more time. You want to spend the time to find a really good deal. You have to spend the time to deal with different parties of lawyers, real estate agents, and tenants. Not to mention that it's going to take you anywhere between 3 to 6 months to sell the house if you need the money or you just want to sell the house. It's just going to be pretty time intensive. Whereas for stock market investing, you spend the time to look at what companies or what index you want to invest into, but that's about it. So using time as a criteria, I'm going to give this point to stock market investing. Now, the next one is cost. And when it comes to cost, I am referring to how much does it cost to invest in that asset class. And cost is actually a really interesting one. But it shouldn't be a surprise that real estate investing just generally has more costs. It costs money for a lawyer, it costs money for a real estate agent, and it costs money to maintain a property. Not to mention all the other things that comes with it. Insurance bills, utility, it racks on. So let me show you a graph on the screen right now. On the graph, you can see that there is plenty of upfront costs when it comes to real estate investing. And when it comes to stock market investing, there really is just a transaction cost. And similarly for ongoing costs, there is utility bills, council fees, renovation fees, and a bunch of other repair bills. Whereas for stocks, if you bought an index fund, there is a little bit of ongoing management fee, and that's about it. And needless to say, from a cost perspective, I'm going to give this point to stocks. So the last criteria is returns. So this one really is apple versus oranges. Let me explain. From the real estate point of view, depending on your location, interest rates, and how fast you can bring tenants to your house, your home can yield upwards of 10% from rent alone. Of course, granted that you pay down the principal on your mortgage as well, the equity in your house is going to build up, and that's even more returns for you. Now, on the other hand, when it comes to stock market investing, we know that if you invest it in the market over the long term, the market generally returns anywhere between 9 to 10%, depending on what era we are looking at. So on that note, yeah, real estate is pretty freaking awesome. So at 2 to 1, it seems like stocks is a better investment than real estate.
Or it might just be because I am lazy.
But honestly, no one said you can't have both. If anything, because real estate is generally a good hedge against inflation, it definitely has a place in my portfolio for diversification purposes. But the high barrier to entry when it comes to real estate investing in Australia has made me look at other ways of how I can invest in real estate without forking out $100,000. But at the end of the day, I know plenty of people who love to invest in real estate, and that's all they do all day, every day. Now, I want to finish the video on this note. So if you don't mind putting in the work, looking for a really good deal, and managing tenants, why the heck not? Thank you so much for watching this video all the way to the end. It really means a lot to me. And if you want to support me, gently smash that like button, subscribe to my channel, click onto the bell so that you will be the first one to know whenever I release brand new videos. Your support really means a lot to me because that keeps me going, creating great videos for you guys. And also, I want to remind you that all of the videos that you've seen, I've repurposed them into a full article on my website. And if you prefer to read them, I'll drop a link in the description box below. And until next time, see you soon.